Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live trading session. And we've seen a lot of volatility in the past 24 hours, but we're going to explain exactly why yesterday's Federal Reserve decision, the monetary policy statement, and the chairman's press conference created a very quick and sudden, considerable sell-off. So there's certain things that the market has priced into the market, and also certain things that they wanted to see in terms of the forward guidance, which was going to be provided by the monetary policy statement and during the press conference where Mr. Jerome Powell, of course, spoke. So the first thing that individuals need to understand is, yes, lower interest rates are deemed to be supporting the stock market, generally speaking, if we're following traditional economics. But keep in mind that the market already priced in a 0.25 basis point rate cut. So the fact that it was all completely priced into the market, of course, meant that the fact that they cut interest rates had no influence and no impact on the NASDAQ. The decline yesterday actually was more than 3.60%. It was the worst day of the year in 2024. It was the worst day for the NASDAQ. The question now, though, is why did it create that such a big sell-off? And also, is the market going to take this as an opportunity to buy the dip and trade back upwards? Because of course, there's the benefit of entering at the lower price. Or are they going to continue to hold off lower exposure to the NASDAQ and continue to speculate the decline? So as I said, interest rates, they were cut by 25 basis points. It was already priced into the market, so it had no impact at all. But the market wanted that forward guidance. They wanted to hear that the Federal Reserve in 2025 was going to cut interest rates by between 3 to 4 on 3 to 4 occasions by 25 basis points on each time. So this is the bare minimum that the market wanted to hear. The Federal Reserve actually came out and gave an indication that they only were going to cut on 2 occasions. So in 2025, only by 50 basis points. So that basically means that the market was incorrectly pricing the NASDAQ. Now, keep in mind also, in addition to this, the Federal Reserve gave signals that they weren't going to cut in January and March like the market previously were expecting, but they're actually now indicating that they're most likely going to opt for their first adjustment of 2025 to be in May. So there's a big difference there. So far over the past few months, all these buyers and all these investors and institutions are in a lot of profit because of the performance of the NASDAQ. So it was very easy for them to limit exposure, reduce exposure, limit risk, and very simply cash in profits. Taking into consideration the monetary policy has changed, the sentiment has become significant, much more hawkish. So it was very easy to sell and reduce the risk. So now the question, ladies and gentlemen, is the market going to push the price back up, use this as a discounted purchase price to enter at a more competitive price, or is the market going to continue speculating the decline? Now, of course, today the market is seeing upward price movement, but we need to determine where we're going to get potentially indications that the price is going to continue to decline or continue to correct back upwards. So a lot of people, when they're looking at technical analysis, they want to use the momentum of the price as an indication of where potentially there's enough momentum to basically signal that the price could move into in a certain direction. So far we've formed a retracement. Now, if we're going to use 65% momentum, you can see the 65 level here. It's the 6th line in the Fibonacci retracement levels that I've got here. So at this point here, so the first thing individuals need to take into consideration, because this is still a retracement. We're still, if we look at the high here, we're still significantly lower than the previous high, and we're still managed to form a lower low as well. So there is still potential that the price is going to decline. We're still below the trend line, the price sentiment indicator, and we're still below the 50 on the RSI as well, comfortably below the 50. So there is here on the 2-hour indications that indeed the price is still being should we say, driven by sellers and controlled by sellers. So if we're going to get a retracement, the retracement lose momentum and then decline, as soon as we drop below this level, which is basically 65% of the momentum being regained, then we have an indication that potentially we're going to get that second impulse wave. So for example, here we had a retracement as well. We can see a retracement here. The 65% level was at this level here. So for example, it retraced here, but we said potentially if we gain 65% momentum, then it could rise again. And we did see that rise. So it's the same scenario that we're looking at here. If we get the retracement, lose momentum, and it being regained, if it declines below this level, then we can look at that as a scenario where we can speculate a further decline. Now, if people want to also look at a potential target, short-term traders will definitely look to aim for the 100 level, or potentially if they're slightly more risk averse, they may look at the 88.6. Swing term traders may look at, for example, the 123.6. So those are two potential targets that individuals may look at based on this indication. Now, some individuals though may want a earlier indication, because based on that indication, we need quite a lot of momentum to be regained as well, because this is a 2-hour time frame. We need at least 1% to be regained. So individuals may of course look at that as one signal, but they may look at additional trades as well. So for example, people may look at the breakout level. So this is the breakout of the low. A lot of people though will be cautious that in this area here, people are going to be putting their stop losses. Large institutions may take advantage of that in order to more easily enter the market. So they may slightly opt for a lower entry point here, and that way they're avoiding the stop area where a lot of people are going to be putting their stop losses. So these are two potential areas that we can take into consideration for those individuals that want an earlier entry as well. Now, what I will say, ladies and gentlemen, for individuals looking to speculate a retracement, a stronger retracement, or speculate a correction, there's a few things we can take into consideration. This is where the announcement was made here. Now, in terms of a retracement, a lot of people look at retracements as 50%. So 50% retracement will be at this level here, ladies and gentlemen. So a lot of price movement for especially day traders, session traders, to take into consideration, because the price is here, so movement all the way up to the 50 level on the Fibonacci. Alternatively, if people are looking for correction, it doesn't necessarily mean they need to move all the way up to the previous highs up here. They can aim for our moving average here. So we've got a simple moving average. So in terms of a correction, they could aim for that level as well. So ladies and gentlemen, we've looked at scenarios for both downward price movement, so basically the continuation of momentum and the trend, or a retracement or correction upwards. So we've looked at where potentially indications may materialize, and if they materialize, where the indications indicating the price can continue to develop onto. So that's it for today, ladies and gentlemen. If people also want to back up their indications, there's a few things they can look at as well. What individuals can look at, especially for the stock market, is, for example, if we're looking at the NASDAQ, they can look at the performance of individual stocks which are within the NASDAQ. So individuals may, for example, look at the top 10 influential stocks, basically the top 10 most impactful stocks, and they may want 70% of those to be increasing in value in order to back up, for example, buy signal, or 70% to decrease to back up a sell signal. In addition to this, of course, people are going to be looking very closely at bond yields, because they have become considerably high, especially after the announcement yesterday. If this continues to increase, at the moment it's increasing today, then there's a higher risk of the price again declining like yesterday. So the fact it's up 36 points today is an indication that we need to be cautious that when the US session opens, we're not going to suddenly dip. In which case, if that does happen, then of course we can look here at the indications we looked at on the 5-minute time frame. So that's something, of course, we can take into consideration. So we looked at, for example, the breakout levels here, or just below all breakout levels, in which case we're looking at this level here. So that's it for today, ladies and gentlemen. Hopefully you found it educational and informative. Trade safe, trade responsibly. Of course, we have free webinars available to all traders who sign up with HFM. We also have swap free trading and a zero spread account as well. But in the meantime, enjoy the rest of your afternoon and take care. Goodbye.